Hey, what's good? It's your boy Matthew Michael, and while I intended for this week's video to be timeless, this video is going to especially help you out with the way the stock market is right now, and in the future, especially in times of increased volatility. In today's video, I'm going to show you 3 things. The first is how to take an options contract and make it completely free. The second, and probably the main reason you're watching this video, is I'm going to show you how you can technically make more day trades. And last but certainly not least, it's a basic concept, but it is a crucial one. I'm going to show you how to close out different options positions, including the ones that we'll be constructing in this video. If all of that interests you, keep watching and I'll be sure to cover every bit of it by the end of this video. If you're new here, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content or giveaways. I post 2 new videos every week and I would absolutely love to have you as part of the family. Also, be sure to smash the like button so that we can continue to grow the family. I worked hard to pack in lots of free value in this video, so make sure that you're not being greedy. Share this video with everyone that you think can possibly benefit from this content. I'm going to take my Instagram and leave it right here. Do with it as you will. And just one last announcement before we get into the video. If you're interested in signing up and getting 2 free stocks valued up to $1,400 with the minimum of the second stock being $12 in value, sign up for Webull using my link down below in the description and deposit $1 and the stocks are yours. But without further ado, let's get into the video. Okay, so to start this video off, I'm going to show you how to close an options position, because this is a basic skill that can be kind of confusing to someone who's never closed an options contract or have never closed multiple contracts at the same time. Alright, so we're here in Robinhood and I'm going to show you how to close out a position. Okay, so I have this Apple 240 put here, and if I wanted to close it, I would click on it, hit trade, I would hit sell because I bought it, and then I would sell 1. You see I'm on this screen, I'd hit review, and I'm not going to do it because I don't want to be marked as a pattern day trader. But if I didn't have to worry about being a day trader, I would then follow the prompts, swipe the screen up, and then I would sell out of it. Simple as that. And one last thing about this, you can change and adjust your price. You don't have to go with the number that's right here. You can type in whatever. If I wanted $60 for it, if I wanted $80, if I said I wanted $500, I actually need to just put 5. But yeah, that's how you do it. And if you want to sell this faster, right here I'm clicking on this under the limit price. You see the bid and you see the ask. That pops up this screen, and the bid is 67 cents or $67 right now. So if I wanted to sell this right away, I could sell it for 68 cents because there are 5 people who want it. But I'm not going to sell out of it. As you can see right now, I've used all my day trades. So later in this video, I'm going to show you how we can actually still take profits from this today without being marked as a pattern day trader. So yeah, keep watching. Now be sure to hold on to the skill that I just showed you, because later in the video, I'm going to make it just a little bit more complicated. And now that I've showed you how to close a contract, I'm going to explain how you can get an options contract completely for free, and even make it a position where you can only profit from it. And this is going to work even better in times of increased volatility. And in order to do this, all we have to do is buy an options contract, and then once the next strike hits the price that you bought the original for, sell that contract for the price that you bought the original for, if not higher. And just like that, you have a free options contract. And I know explanations can be a little confusing, so let me show you using Pfizer. Okay, so we're here in Robinhood, and alright, so we're looking at Pfizer. So we're gonna hop into the options chain. I like to look with time on them, so I'm gonna look at them with time on them because this strategy works better with more time on it. But it also works when there's not that much time as well. But the more time, the better. Okay, so it says right here the share price is trading at $34.92. And just for example, let's say I bought a put for $33 and I bought it for 51 cents. I'm not going to actually buy this, but just for example, say I bought 1 share and I bought it for 51 cents. This is a put, so the price needs to go lower in order for this to get closer to the money. Alright, so let's say we just bought that for 51 cents a share. The next strike price is this 32.5 put. And right now it's just 8 cents away from that $33 put. So in order to get this for free, all we would have to do is wait for Pfizer to go down a little bit and wait for this strike price to hit the price of 51 cents. Or if the price goes up to 60, you just locked in some profit for selling it. Once it gets to 51 cents, make sure you're on the sell tab up here. Okay, so I clicked over the sell tab. We're just pretending right now because it hasn't exactly moved there yet, but it likely will before this option expires. So what I have to do is hit 1, and sell it for 51 cents. And whenever this contract executes, that other option we bought today was completely free, because when you sell this, you get that $51 back to you, and you don't even have to worry about covering it because that 33 strike is closer than that 32 strike. If this ends up being in the money, you'll be perfectly fine because you have that 32 strike, and that will offset it. And that means if this ends up in the money, you actually end up getting to profit $50 off of it as well because of the difference between the strikes. And now that I showed you how to get free options, just in case you decide you're happy with profits and you want to get out before expiration, I'm going to show you how to close out of one of these positions. So let me grab my phone yet again and hop back into the handy dandy Robinhood. Okay, so we're back here in the handy dandy Robinhood, and in the Robinhood app is still not updating my money where it should be, but no worries, I can still do these trades. I'm actually going to show you how to do this because I actually have one of these that I made, and I actually want to show y'all how it's worked out for me. Okay, so I have these Pfizer puts right here. You see I have a $33 Pfizer put, and notice that it says buy, and then I have a 32.5 Pfizer put, and notice that it says sell. I already took profits off this instantly. Just to show you, the ones I bought for $30. I bought 5 of them for $30. I paid a total of $150 for these. And then after I bought those, I sold these against it for an initial profit of, I sold them for 36 cents. So instantly when I sold it, because there are 5 contracts, there was 6 cents profit per each contract. So I realized $30 instantly when I sold it. And right now, if I sell out of both of these contracts right now the way they are, because there is a $4 difference, if I sold all of them, I could still get $20 profit if I close this out right now the way it is. Just to show y'all, I'm going to close out all these positions and I'm going to take profits. It's not showing all together because I made these as 2 individual trades, but yeah, we're going to run to the options chain. I'm going to show you how to close this out. Okay, so it cut out for a second, but I'm here on I'm going to go to the Pfizer options chain for the date that these contracts expire, which is March 3rd. So trade, view all options, and yeah, it's being slow right now, but as you can see right here, there's a +5 on the puts I bought and a -5 on the puts I sold. So in order to close these positions, you just need to do the opposite of what you did to buy them. So I'm going to hit select. Some of y'all on the lower level trading who don't have access to higher level trading on Robinhood don't have select. So in order to close this position, you would need to have the money to buy back the puts you sold, and then once you buy back the puts you sell, you can sell the puts that you own on their own and then recover all the money for this. But yeah, I'm going to close this, and in order to close this, I need to, alright, so it's on sell, so I need to sell back the puts I bought, and then I need to click over to buy and buy back the puts I sold. Then I'm going to click on the 2 options selected down at the bottom. It says total credit $5, and that's $5 per each contract that I sell. So I hit review, and then I put how many of each contract I want to sell, and I'm going to sell all 5. So it looks like there's no bid for this because it's far out of the money now, but yeah, if I were to sell this, review, and it asks you if you expect to receive a credit or a debit. That's basically asking, are you receiving $25 or are you paying $25? If it's a debit, you're paying. If it's a credit, you're receiving. So I'm going to hit credit, and then I'm just going to swipe up and submit. And just like that, whenever that fills, I close my position. Alright, now that I showed you all that, it's time to talk about the main reason that you probably clicked on this video. That's right, we're talking about how to get around only having 3 day trades trading options. And don't worry, you don't need to fund your account with $25,000, because I know a lot of you starting don't have $25,000. You just simply need to construct the position that we made earlier in this video, keep the position open the first day you make it, and then close it out the next. I know it doesn't sound like a day trade, but when you think about it, it is. Think about it. When you buy the first contract, you're making the trade. Then when you sell the second one, you're securing the profits. And it doesn't even count against you as a day trade. The only thing that you need to make sure of to make sure that this doesn't count against you as a day trade is just to make sure that you don't close out of the contract until the next day. You just gotta sit there and be happy with the profits that you already took. Then if you want to take more the next day, you can close out the position, or you can wait till expiration and see how it plays out. But no matter what happens, take those profits. Wow, we just went over a lot in such a short time frame. You just learned how to get free trades, how to close out positions, and even how to get over only having 3 day trades. If you learned anything from this video, please be sure to smash the like button and share this video with a friend. Don't be greedy. If you made it this far in the video and you haven't subscribed, what are you doing? Subscribe and hit the bell notification icons so that you don't miss any future content or giveaways. I post 2 new videos every week and would absolutely love to have you as part of the family. And last but most certainly not least, thank you so much for watching, and peace.